Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. You can follow us on YouTube, Facebook, Twitter, or MySpace. And like we do every night, it's time to look at the markets. So let's check it out. Okay, I'm not feeling that great today, so I'm a little bit crazy, a little bit doped up on the old Dayquil. So let's get this over with before it wears off. All right, to start off, looking at the Dow Jones Industrial Average. First off, the markets closed in split fashion today. Had the Dow Jones down about 15 points. The S&P closed relatively flat, and I think the Nasdaq was up like 6 points. But the main thing to point out here is that nobody should be buying these markets. There is potential for a bounce to the upside simply because you've had X number of days to the downside. Only fall, no market falls straight down or rallies straight up. So you should be expecting a bounce. And the main thing I want to point out here is, like I mentioned on Monday, there's potential for a bear setup right here. What you got is the low points of the slow stocks are trending lower, right? That's where you get that red line right there, okay? And the low points corresponding with those low points right here, and hither. Okay, they are trending higher. All right, this means that the price activity actually hasn't fallen low enough to justify this activity. Therefore, more selling must take place. But a lot of times, what will happen is you'll get so many days of sell side that you'll end up getting that bounce prematurely. So you could actually bounce tomorrow or the day after and actually still have more selling to come. So kind of trying to warn about that. It's a short-term move to the upside that is still coming unless we get a major sell-off that actually falls below this level. Any bounce that happens before we break below here, before we fall all the way through that, is going to be falling into the bearish setup category. So what you want to do in that case is when that bounce happens, you want to short it. There should be no reason to be going long this market in any way, shape, or form. If you don't understand what the bear setup is, don't worry about it. You can go to our free website at perfectstockalert.com. We got videos showing that particular indicator and what it means and how to read it, so forth and so on. The main thing is that you should be looking for a move to the downside. Like I said before, all of this activity from here up is a fake rally. All right, it's proven by the VIX. We'll show it to you again today. But all this is going to end up being erased. And what you need to be realizing is the most important fact is that if you were shorting this market to the upside, you were doing it right. You were doing the smart money trade. If you were long or you're long now, you are not in line with what smart money is doing, and that should give you pause. You should be asking yourself, why are they doing something that I'm not? So let me show you what I'm talking about. Okay, smart money has a lot of money. They've gone to school, they're educated, they're good at what they do. People give them money, they've earned a lot of money, so forth and so on. So when they move in the market, you can see them. And the volume indicator very easily, okay? This red line right here, okay, is going to be your average daily volume. Anything at that line is just regular old daily volume. Anything below it is substantially low volume, and typically we refer to them as dumb money. It's just people with very little bit amount of money tossing it in here and there. But the reality is, whenever you get a market activity like you're seeing here, you get a rally. We can go further back if we extend this chart to, prior to the flash crash. You can see they were loading up on the short side before it happened, and then they shorted more as it was going on, and then you'll notice they never came back in and started buying. At this rally up here, they were shorting here. Okay, you can see that substantial volume there. Big move up here, they were shorting here, all right, just like we were. Okay, big move up here, they were shorting here again. You'll notice none of the bounces have substantial buy volume behind it. There's no big, humongous, tall sticks of smart money buying because they don't trust it. They have looked at the fundamentals, they looked at the technicals, and they don't see a quality buy opportunity. They see the same thing we do. And if you go and you look at the news articles talking about how insiders are selling more stock than they have ever before, as far as since we've been analyzing and keeping track of it, you start to realize why they're doing this. They're all looking at these same things and they're concluding the same thing. They need to be selling. So whenever they ran up there again, they were doing that selling again. This time here, selling off here, again, substantial selling. All right, it's important to note that because you want to be sure you're on the side they're on. You want to do your analysis. If you're done right, you're going to conclude the same thing they conclude. If they conclude it's bogus rally, you need to be shorting it, then you like to find yourself on the same side of that trade. And anybody who's shorting right now is making money and is actually doing the same thing smart money's doing. So I see no reason to change that here. Like I said, you can still get a bounce here. Once you get down below the 20 line of the slow stocks, it's more likely to get that bounce. Let me show you that. Okay, you can see we've pulled back down to the 20 line, not quite below it yet. This is the 20 line right here. whenever you fall below it, that's where you start getting those bounces, okay? So you start looking for that to happen when you get down there, all right? And we're down there now. But like I said, this right here is false. It has to do this number. Confirm the same activity you see on the slow stodge. So until that happens, any bounce to the upside is something you want to short. Don't be going long this market. Also, I want to remind you, next week is the U.S. holiday of Thanksgiving, and that means you're going to have some really funky market activity, okay? So it's going to be real low volume and things like that. You can expect that unless some kind of news breaks out of Europe, something like that, to actually send a major market sell-off. I wouldn't expect a lot next week, but again, I would not be holding over the holidays or over the weekend on the long side. Okay, somebody asked me what my thoughts were on gold. What did I think about that? Basically, you need to watch these videos every single night as I go over an individual chart every night, but I won't go over the same charts every single night. So again, it's helpful if you just watch every single night's video. I'll go over those individually as time goes on rather than try to answer everybody's questions, okay? So just for the heck of it today, let's go ahead and do this. We got a low point here on this slow stodge, a lower low here, all right? Still trending down, all right? The price activity for the corresponding low points, what are we seeing here? Looks like a bear setup to me. Any bounce before price activity goes lower here on gold is going to be something you do not want to be a buyer of. Again, like I said before, I will not short commodities while we're messing around with everybody's doing this fiat currency war. I'm not going to even begin to mess with that. There's easier short opportunities out there. But again, I would not be long gold believing that it somehow protects me from overall world global market sell-off. It will not do that. If you look at gold back in 2008, you saw what happened to it. It did not protect you in any way, shape, or form. Not from a short-term trader standpoint. Okay, somebody else asked me what I thought about the Hang Seng Index. I think it's toast. I think they're being put under pressure with all that the Fed's doing, and I've got my own opinions on, how China is going to respond to that, and they're definitely not going to like it, and it's causing them some havoc, and it's going to continue to press commodity prices higher over the longer term, as long as the Fed continues to do what they're doing by trying to devalue the dollar. But like we said before, their activity is just a waste of time, because as people sell off the overall markets, they do what? They dump stock and they get the dollar, which drives the dollar back up. So it doesn't actually solve anything that the Fed said is going to solve. It's actually going to end up hurting companies. It's going to hurt consumers, and it's going to hurt other countries. And I wouldn't be surprised if they end up backing out of it. If they got enough pressure from enough people to just say, you know what, we're not going to do QE2 the way we thought we were going to. But I definitely wouldn't be looking at QE3 and QE4 and QE5. I don't think they got the political backing for it. So I wouldn't think of that at all, but I wouldn't even be considering any kind of a buy just because you've sold off substantially. Whenever you're selling off like this, you're getting this little activity to the downside here or back here or whatever. You want to wait for this guy right there, that particular candlestick formation. You get it here, okay? Whenever you get that, it's your first sign of some possibility of a bounce to the upside that is actually going to be worthwhile to trade on. If I don't have that, I will not touch it from the long side. It's got to have a hammer formation. That's what that's called. We have videos on our website discussing how to trade those. But again, this one here, no hammer formation. You have an inverted hammer or a shooting star, which is a sell signal, another one there, and yet another one here. So no, I would not be looking to buy. Yes, you can bounce, but again, I would not be interested in that bounce unless we have a hammer at a bottom. Okay, quick look here at the FTSE London Financial Times Index. We've talked about this before. Note the low points here, here, and lower one here. We are trending down, okay? Yet corresponding price activity, what's it doing? It's still trending up. That means we got more selling to come. They bounced a little bit today, but not proper. You need to sell off more than you already have. So if I got a bounce in any way, shape, or form, I take it as a short opportunity. I already shorted there, so it's not a big deal to me to be adding at this point, because my average between here and here would put me in about the same point. So I'm not going to go adding here. It doesn't make any sense for me. Okay, if you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. Also, if you don't mind subscribing to our YouTube channel, we'd appreciate that. It doesn't cost you anything, but it helps us stay free, and that's pretty cool. We appreciate that support. A quick look at our disclaimer. The disclaimer, read it and weep. God bless, take care. I don't feel that well, but I'm going to get a video out every single day as I have for the past 7 months. But come next week will be the holidays. I know a lot of you guys are going to be off traveling, this and that. Just be safe, okay? God bless. Take care.